Colbert Kravis and Roberts is an international investment firm that manages various classes but not limited to private equity, real estate, credit, and even hedge funds through its various partners. Because of the RGR Nabisco leveraged buyout, which was the biggest at its time, valued at $25 billion. KKR's customers are essentially clients that invest in its funds. KKR invests its clients' money through various funds, depending on the type of assets the company wants to invest in and the time frames involved. Investors in its funds include high net worth individuals, pension funds, families, and endowments, corporations, financial institutions, and insurance companies, but are not limited to them. Therefore, as we can see through asset transformation, average individuals are invested in these funds as client of the company. According to the company's annual letter to shareholders, 50 million retirees and pensionaries are exposed to the company's investments.
The competition is based on various factors such as, but not limited to, investment performance, risk tolerance, investor liquidity, quality of service, management fees, and duration of the relationship. Bain Capital, Blackstone, and Cradle Group are three of other corporations that offer similar services. The company offers investment services through various funds. The company has 4 business sectors it operates in. Under private market, the company operates private equity funds, where the capital tied up for long period of time in companies where KKR either gains a controlling interest or a strategic minority interest. Public market represent the investment made in hedge funds and credit. Capital markets are essentially markets that help direct the flow of capital in the form of equity and debt from investor to parties in need of the funds. Principal activities include investment that the firm makes of itself.
KKR operates in different parts of the world. In the US, is regulated as an investment advisor broker-dealer, and the company in the US is required to maintain a certain percentage of its assets under a liquidity forum. The company operates also in the European Union and some other continents. And in the European Union, it does that through an entity in Ireland that is controlled by the Central Bank of Ireland. And operating in Ireland is an advantage for KKR, since Ireland is the country which has the lowest taxes in the European Union, and allows KKR to operate both in the European Economic Area, but also in the United Kingdom Economic Area. The assets of this firm can be divided in assets owned by the firm and assets owned by the funds. And the assets owned by the funds are invested in the different fields such as healthcare, but also healthcare, credit, and telecommunications. And the performance of these companies shows the position in the market that they are taking, since in 2018 they had a growth of asset under management of 16%, from 168 billions to 195 billions.
The company's sources of funds include debt obligation for 5.5 billion. The company has revolving credit facilities available up to 2.2 billion, which remain unused. The company also receives funds through equity offerings at values for greater than the par value, presented by the enormous additional paid-in capital of 8.1 billion. Revenues and expenses. Well, the company charges multiple types of fees for its investment service, such as, but not limited to, management fee, transaction fee, monitoring fee, incentive fee, and consulting fee. The company makes majority of its fee revenues through transaction fees, 989 million, and management fee, which are 725 million. Total fees are 1.8 billion. The company's various operations in various industries have diversified the risk across its portfolio. However, the company still has various risks that it must understand and control. Thank you.